We're looking at the two banks' international operations. Firstrand is in other African countries and in India with representative offices in other countries. Standard Bank, on the other hand, has a significant relationship with ICBC of China and has been selling off stakes in Russia, Turkey and Argentina, in effect pulling back from those territories. It still has a big business in London. So let's investigate a little bit further here.
Standard Bank, of course, has also got involved with Africa much earlier, spent a lot of money and put a lot of capital into establishing full-blown branches in places like Angola, Nigeria and so on. FNB, Firstrand, to some extent playing catch-up in that regard. But I think it's part of how Standard Bank's strategy evolved. ICBC.
But that's why Standard Bank always commanded a premium to the other banks, was their Africa footprint.
Yes,
Not
but it looked for a while as though they were going to go global, you know, with Turkey, Russia.
Argentina, Russia.
Now it looks as though ICBC has said, no, thanks very much. We want you to be our African pony. And these other places, thank you can get out of, because we're expanding in that space, which I guess is okay. But it does mean that they're starting now to see the benefit of having gotten into these countries, because it means they've got a stronger base in places like Nigeria and Angola, which are going to be very important markets.
Do you think that Standard Bank deserves a premium given its Africa first move advantage, if for want of a better term?
Unfortunately, that premium has turned into a discount in the last few years as the profitability of the African and especially the UK, the London operations, have decreased. So at the moment, they're struggling to get to a return on equity on that capital that has been allocated to Africa and the UK that exceeds the cost of capital.
So they haven't been able to maximise their first move advantage?
Correct. So they had a strong start and then they had a bit of an issue because of the heavy regulation in London. And that means that at the moment, there's more than £1 billion of capital locked up in London that is not generating a sufficient return. While Firstrand is taking a capital light approach, going more organically into Africa, and when it comes to investment banking, doing suitcase banking, just get on the airplane with your suitcase, fly in and fly out when the deal is done.
Sit under a tree, open up your suitcase and bank the population.
Exactly, which is a lot more profitable on a return on capital basis. So you might not have the footprint in country, but what shareholders want is a high ROE. When you look at the ROEs of the two businesses, because of these differences in strategy, Firstrand has got a much higher ROE than Standard Bank.
And you've got to beware, Firstrand, given their aggression on the personal banking or in the personal banking space and also in the corporate and investment banking space, that Standard Bank may not command that first move advantage much longer in terms of the footprint I'm talking about now. They're obviously trading at a discount.
I think you've got to separate, though, London, which is clearly a bit of a problem. London has been a very tough market, and for one reason or another, they've really drawn in the horns, and the capital issue is clear in the results. I think the Africa thing is a much more positive story, because while you can do the suitcase banking for big corporate multinational type clients, I think to really get under the skin of a market, you need to have close working relationships with the local authorities and the regulatory thing. So yes, initially it looks like expensive dead capital, but I think if it really goes big, if this is Africa's decade and all that sort of stuff, then this will become a very significant competitive advantage, I believe, in Africa. But it's all a bit mixed, you know, you have to take this story with the others and all the other bits and pieces together.
So you are backing the fact that branch infrastructure perhaps not necessary into Africa, pull back your costs as Firstrand is doing, maybe JV with partners. Is that what we're seeing unfolding here, or have I got the story wrong?
No, quite correct, and that's what they're doing in India, for instance, a JV type operation there rather than acquiring a branch network or really spending a lot of capex. But that's just the nature of Africa. It's a long-term story. You go through quite a deep J curve, where because of the capital invested on day one, you first see some losses to actually carry those branch network expenses before you see the profits coming years in advance. Some shareholders don't have the patience to wait years and years, so it's probably a balance between not diluting your current returns too much, but still investing 4 or 5 years out to make sure that for the long term you have a good footprint in Africa and you have first mover advantage when the African commercial and consumer story picks up and banking gets hold to a greater extent in Africa.
Who's leading in the international space?
Look, I don't think either of them now have aspirations to go into developed countries. They're both going to confine themselves to the likes of the territories we've been talking about. I think Standard Bank has been in Nigeria, for example, a long time. They bought in there early. They're now one of the leading players in that market, whereas Firstrand has just recently got an investment banking license and had to put their first $100 million of capital in there. So there's no question in my mind that Standard Bank is already far advanced there. The question is, what will it show in terms of results?
Jean-Pierre,
Because there's work to be done.
quick one on this front.
Well, just briefly, so also in Africa, Standard Bank are expanding through Liberty, which has some operations across the continent where they do some life insurance. Firstrand doesn't have that. They unbundled Momentum, merged it with Metropolitan. That's MMI. It's not part of the Firstrand fold anymore. So if you look at international operations, Standard Bank has got a deeper footprint, a much wider footprint, but it comes at a cost. Because of that, I would rather go for Firstrand.